Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news the rise of the gig economy might be messing with how we measure our labour markets. But first, American retail sales for October came in with a strong result, up 5.9% from the same month a year ago and beating estimates, boosted somewhat by storm replacement demand. In Canada, residential sales levels came in much lower than expected. They were down 3.7% in October compared with the same month a year ago, and house prices eased 1.5% from September, although they're up 2.5% year on year. Meanwhile, the latest unofficial indications of their job market show a surprising fall of 23,000 jobs in October in Canada after a very strong September result. A small gain was expected. And back in the US for a moment, a part of the puzzle of why their employment rate is so low may have been answered. New official research shows that maybe as many as 3 million people in the gig economy are not being counted as employed when they clearly are. Numbers at that level will make a huge difference to how we see the American labour market. In Beijing, their official statistics agency released data on house prices showing broad stability. In this data, there is no signs of tensions and stresses reported elsewhere of falling prices and the social anxiety these are apparently causing. Chinese censorship rules are now extending to official economic data reports following instructions not to badmouth their economy. In the EU, car sales are still falling in October, data out overnight says. They are down 7.3% year on year, although the fall-off is at a more moderate pace than we saw in September. But results vary widely by country. Spain is up 10%, with one of the highest growth rates, followed by France up 5.7% and Germany up 1.4%. By contrast, registrations in Italy declined 3.2%, and in the UK they declined 7.2%. The EU trade surplus came in much lower than expected in September. In the UK, their Prime Minister was fighting for her Brexit deal just hours after it was sealed, as a series of ministers resigned amid deepening political turmoil over the terms. And the CEO of Australian insurer IAG has warned a failure to reduce carbon emissions could result in a world that is pretty much uninsurable. And the RBA is sweating the fallout from the credit tightening following their Hayne Commission review. They see the resulting pullback pushing down house prices more and restraining lending more. There is a risk that this process overshoots, leading to a sharper and more protracted decline in activity than is currently expected, they said. The US Treasury 10-year yield is at 3.11%, a rise of 2 basis points. The Aussie government 10-year is at 2.71%. The Chinese government 10-year is at 3.43%, while the New Zealand government 10-year is at 2.78%. And gold is up $10 today at $1,213 an ounce. US oil prices are little changed today, now still just over $56.50 a barrel, while the Brent benchmark is just over $66.50 a barrel. And the Kiwi dollar will start today firmer yet again, now at 68.2 US cents. On the cross rates, we're down slightly at 93.9 Aussie cents after breaching 94 yesterday, and we're at 60.3 euro cents. That puts the TWI up to 72.8. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.